Hello guys, welcome back. It's Tuesday, webinar day. So today, 6 to 7 Australian time, 6 p.m. We're gonna have a webinar where I'm gonna discuss all my analysis during the week, as I've been doing this already for the past 2 weeks. And you know, it's very nice. It's a very good moment for you to learn a few fundamentals and how to analyze the fundamental aspects on the market. As well, you know, I've mentioned last week that most of the people that were into the seminar on the webinar last week, they decided me to teach them how to build a strategy. So today we're going to start that. So of course we're going to have the analysis, but on a plus on the end, on the rest like 15 to 20 minutes, I'm going to start teaching how to improve your trading skills as well, using a very data-dependent approach to the market, you know, collecting data and on good sources of data, of course, and so on. Right, so I see you tonight, 6 to 7. It's free, 0 charges, and yeah, the link is down below, so you can just subscribe to it. Okay, now let's go to the video. We just had RBA came in across for the rate statement, of course, 2:30, you know, so 30 minutes ago, actually 33 minutes ago anyways. And there's no surprises. There's like zero surprises, to be honest. You know, it's like I've been mentioning yesterday, we would pause. That would be the most intelligent move, I would say, the smart way for RBA at the moment. I have the rate statement on my hand. There's a few nice things here that they still stating. You know, they still keep talking about the things since the past 4 to 3 meetings. And one of them is that they pause because they need more time to assess the economy. Do I think that this is truth? Well, I'm not on their boots, so I can't say that this is truth or not. But what they're trying to do is acquire time, pausing those, and not pausing, I think, well, they are pausing, but they are postponing something that will happen pretty soon, that either will raise or cut. They can't pause for the whole next year, right? So there are a few very interesting moves to happen on the Forex market next year. And I guess it will be very important to Australia as well. So watch out the Australian dollar. Another thing that they've mentioned here is that the inflation in Australia has passed its peak, and the monthly CPI indicator for July showed a further decline. So for them, we're not going to have further inflation moves up. So it will either stay the same or keep slowly going down, as we had from last month, July, that showed a further decline. But inflation is still too high and will remain for some time yet. So they keep acknowledging that they know that inflation is high, and they know that inflation will keep high for some time. The central forecast is for CPI inflation to continue to decline and to be back within the 2 to 3% target range in late 2025. 2025 to be to 2 to 3%. Can you imagine that the whole next year we're still high inflation, and then 2025 first quarter, second quarter, third quarter, and then on the fourth quarter we may have inflation at 2 to 3%. All right, so it's taking us more than 2 to 3 years to bring inflation down. And for those who told that inflation would be at 2% in the end of this year or beginning of next year, it won't happening. It's not happening. I can, you know, guarantee that it's not happening. There's so much things involved on it that we can't just come here and say, oh, inflation is going to be 2% next year. No, it doesn't sound right, and it's not even like, it's out of context. And they say late 2025. As well, they've mentioned that the Australian economy is experiencing a period of below trend growth, and this is expected to continue for a while. So it's still performing very poorly, Australian economy. Returning inflation to target within a reasonable time frame remains the board priority. And as well, they state that some further tightening of monetary policy may be required to ensure that inflation returns to target in a reasonable time frame, but that they will continue to depend upon the data and the involving assessments of risks. In making its decision, the board will continue to pay close attention to developments in the global economy, trends in household spending, and the outlook for inflation and the labor market. So basically, they are looking for those 4 things that I've just mentioned, that are the global economy, household spending, outlook for inflation, and the labor market. If everything keeps strong, they will have to come across and say, okay, we're going to raise. If everything, go like on a weaker aspect, then yes, we may have more pauses coming. Okay, so we have to watch out inflation, we have to watch out the labor market, and so on. So that's it, guys. Australia left, RBA left the rates at 4.10 as very widely expected. If you look Australian dollar, against US dollar or against Swiss franc or any other currency, you can see that nothing really happened on the market. Well, it did move up, did move down, but same price as before the news hit it. So for the moment, still data dependent approach on Australian dollar. All right, guys, that's it for me today. So subscribe to our channel so you don't miss any videos that we post here every day on a daily basis, and give us a thumbs up. And if you have a trader if you have a friend that is trader, just share this video with him, and you're gonna be helping us, and you're gonna be promoting a very good content to him. All right, guys, that's it for today, and I see you in the next video.